Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, April 26th, 2016. We'll take a look at Apple today. Apple reports earnings after the close. And really what I wanted to talk about today is how I pulled off a beautiful short on Apple. We netted about 7% gain in just a basic couple weeks. Now, a 7% gain, most people would be like, it's not that good. But to be honest, in a couple of weeks, it is. And the key is you have to be able to know exactly where you're going to play either a long or a short so you don't get behind the eight ball and be out of the money and have to sit in the trade for a long period of time before making money. And basically, this was one of the simpler trades because Apple had rallied off the lows substantially and went right into the 200 moving average here. And that's where I pulled off the short. So basically, it was a straight shot up into the 200. Resistance of the 200 MA, we all know that is a huge level, especially the first hit in this scenario. And then look at what happened. The stock pulled back, retested, but look at the high here. You never took out the highs on a closing basis. So that means essentially that this trade was still in play. And you want to watch these factors. So basically, let me explain this. When Apple pulled back here and then re-attempted to break out, what you want to watch as a pro investor, pro trader, is whether or not you get a daily close above this high. Okay, and look at that. If I put a trend line in right at that high, you can see you touched the high on 2 consecutive days on the daily chart. You never closed above that. So now an amateur might look at this and say, okay, well, on this day right here, we closed above the 200 MA, this red line here. And they might say, oh, that's bullish, that's a breakout. No, it's not. There's no confirmation there. Another investor that's an amateur might look at this and say, oh, we pierced the pivot high by 3 cents here. That's a breakout. That's a higher high. No, it's not. Not in a technical, hardcore sense of understanding the charts. What you have to understand is exactly what makes a breakout valid and what's a fake out done by the bots, the computer programs, the institutions to get you on the wrong side of the trade. And in this scenario, that's exactly what could have happened to many investors, and I believe it did. Ultimately, it came up right here and closed above the 200. A lot of them said, oh, I'm going long Apple here. It's a breakout above the 200. Other people probably said, oh, it pierced the high right here. I'm going long right at the high. Those people got the worst entry of all. They literally bought the exact high here before this recent collapse. Now, as it came back in, as I knew to stick with this trade beautifully, it came back in beautifully and came down today to open right at the 50 MA. Now, knowing that the earnings are today, I wasn't going to risk my beautiful gain of, $7 or so on a gamble going into earnings. Because in all fairness, the stock is selling off because there's worries about their iPhone sales. Now, the fact that the stock has sold off means that it may already be factored in that they don't have the best numbers. And if they have pretty solid numbers, the stock could honestly be up $3, $4, $5 after hours today. Now, if it's a really horrible report, yeah, sure, it's going to go lower. But do you understand the decision as a pro, as a smart, intelligent investor that you have to make here? You have to say to yourself, I'm already up 7% on a trade in a few weeks. Do I want to gamble, and gamble being the key word there, and go into earnings and hope that they have an even worse announcement than the stock has already factored in, which maybe is only about a 25% chance, and then I'll make more money, but there's only a 25% chance of that happening? Or do I want to take my money off because the risks are now potentially to a move up, at least a 50-50, right? And anytime you're 50-50 in the market, it's not trading, it's gambling. The whole idea is, as a smart investor, you want to put the odds in your favor. And that's exactly what we've done here, and that's exactly what I continue to do here with Research Center members at InTheMoneyStocks.com. So again, folks, I want to show you this real quick. I think this will blow your mind, so take a look at this. Here's our website, and I want to show you the track record. So go to the Research Center under Investor Trade Alerts right here. Click on the Research Center, and I'll center the page a little bit here for you guys. Here's the Research Center. Notice the 7-day free trial, but at the bottom here, this is what I want to draw your attention to, the track record. And if you click on the track record, this is the beautiful thing. Look at this. Net gain for the year so far, almost 364% just in 2016. Okay? And again, that's if you put all your money in every single play, which I would never advise. We just advise keeping it simple. Put 10% of your account in each of our plays, and you're up 36.3% on the year. Think about that. Already 36% gain in basically the first almost 4 months of the trading year. I mean, you're on pace to do over 100% for the year if you're a conservative trader putting only 10% of your account in every trade we've given out this year and closed out this year. That's amazing, folks. Hedge funds this year so far, they're around the 0 percentage point. They basically haven't made money, they haven't lost, they kind of come back from losing earlier in the year and are now fighting back to be flattish, maybe a couple positives. We are blowing them out of the water here. There is no doubt about it. And this is the pure and simple, easy thing. All of these are third party verified, and you can get the access to these trade alerts live in the Research Center. So I encourage you to come to the Research Center here at InTheMoneyStocks.com. At least take the 7-day free trial. It's a no brainer, folks. All right, take care. Enjoy. Let's see what Apple earnings are after the